Accounting, the Statement of Cash Flows, Three Distinct Sections by Lisa Rittenhouse. What is a statement of cash flows? Statement of cash flows are reports on a business's cash receipts and cash flows and distinguish among operating, investing, and financing cash flows. Cash flows are cash receipts, cash payments of a business. Statement of cash flows helps do the following. Past and cash receipts and payments help predict future cash flows. Investors and creditors use cash flow information to evaluate managers' decisions and predict ability to pay debts and dividends. Three basic types of cash flow activities is operating activities is the very first type of cash flow. Operating activities, like I said, is the first section on the statement. Reports on activities that create revenue or expense in the business. Accounts are your accounts payable, accounts receivable, prepaid insurance, and unearned revenues. When businesses sell products or services, that activity is reported in the operating section. Investing activities is the second type of cash flows. Investing activities is the purchase or sale of property, equipment, and plants also qualify under the investment section. Ledger accounts to review for this section include the long-term investments account, vehicles, capital equipment accounts, land and buildings. Report any equipment bought for your regular business operations under investing activities. Includes loaning, such as like cash outflow or collecting of long-term notes receivable. The third section of the cash flow is the financing activities. Activities that increase or decrease long-term liabilities and equity. Lists the information for the company's financing activities, such as issuing stocks, paying dividends, buying and selling treasury stock, borrowing money, paying off long-term liabilities, note payable, bonds payable, mortgage payables. Operating, investing, and financing cash flows and the balance sheet accounts. Each section of the statement of cash flows affects a different portion of the balance sheet. Operating activities affects the current accounts, current assets, current liabilities. Investing activities affects long-term assets, and the financial activities affects long-term liabilities and equity. Example of statement of cash flow. As you can see, the first section is the operating activities, which has the net income of the business, has adjustments, the net income to cash provided by operating activities, depreciation expense, add back on sale of equipment, increase in accounts receivable, merchandise inventory, tax payable is your first section. The second section is the investing activities, which is your purchase of equipment, proceeds from sale of equipment, purchase of long-term investments. The third and final section is the financing activities, principal payment on bonds, proceeds from insurance of common stock, payment of cash dividends. And at the final is your net decrease in your cash at the beginning of the year, and then cash at the end of the year. Ethics in accounting is a term window dressing. Window dressing is manipulating financial statements to show a better financial position and performance than what really exists. Window dressing is unethical and morally wrong. There are many different types. There are many different ways an accountant could manipulate the books by hiding liquidity problems, borrowing right before the end of the year, asking customers to pay before the end of the year so it reflects on the current cash flow statement, changing depreciation policies, and asking customers to buy at the end of the year so it reflects in that current year's statements. These are all considered unethical and would be frowned upon for the business. A Bible verse that I found that goes along with that is Proverbs 12:22. The Lord detests lying lips, but he delights in people who are trustworthy. Whether we lie with our mouths, action, or on paper, dishonesty still remains the same, and people are committing a sin. Lies will eventually catch up to people, and the truth will be revealed, even if it's when we stand before God on Judgment Day. If a business is not doing well, lying on paper won't change the outcome. People need to be truthful and find a solution to change the outcome rather than trying to cover up the situation. This concludes my presentation, and I hope you've enjoyed it. Thank you.